Yeah, hey there, Paul Wilson here. Now, if you're interested in jumping on any of our live trading sessions, or if you want to get hold of our team indicator that can help you get better entries trading the Forex markets, then head over to freedomtraderpro.com where you can find out more information on how you can do that. But for this video, I want to talk about Forex risk management for beginners, because if you're brand new to Forex, or you just don't understand how to calculate risk management, then I want to talk about that in this video. So basically, what is risk management? Now, risk management is all about calculating the risk that you want to put on any one trade. Okay. Now, depending on your lot size, depending on the number of pips that you're risking, will depend on the amount that you risk in that trade, if that makes any sense. I'm going to try and explain it as best I can in this video. Now, I've got this trade here. I'm just going to actually take it away, take the chart away so that we can have a look at this trade, how it played out, and all the rest of it. So what I'm actually going to do here, I'm going to draw a couple of trend lines here as to where potentially we could get into this trade. Now, I'm not going to go too much into the whys and everything as to why I've chosen this particular chart and why I'm putting the lines where I am. I just want to use it to show you how to calculate risk management. Now, let's just say, for instance, you were looking at entering a trade here. Now, I always put my entry lines in blue. So let's just say you were looking at entering that trade here. You were looking at potentially putting your stop loss here or just a couple of pips above here, wherever it is. So let's just say you wanted to put your stop loss there. Okay, now I'm going to draw that in red. And then let's just say your take profit, you weren't sure where you were going to put it, but you had a couple of take profits along the way, and you were going to have your final take profit, I don't know, either below this low here or somewhere around here, to take out, basically to take profit down here somewhere. So let's just put our take profit down here, which is just below this low here, okay? Just for argument's sake of this video. Now, I don't know if this trade's going to actually play out that well, and we're going to put this here. So the red is our stop loss. Okay, the blue is our entry, and the green is our take profit. Now, as I say, I'm not getting into any technicals in this video. It's purely to give you an idea on risk management and how you would calculate that to do that. So say you were entering on this blue line. I'm just going to put a short position on here. So our entry is there on the blue line, stop loss is here, and our take profit is here. Now, if we were to look at that trade, that's a 4.67 to 1 trade. Okay, so that basically that equates to every 1% that you risk on your account, you're going to get 4.67% back. Now, that's if the trade runs all the way down here and you hold in your whole position size down to the take profit. Now, I want to show you how you calculate this part of it, because this section here, your stop, is basically 30 pips. It's just over 30 pips. So say we wanted to put our stop loss, and we wanted to put our stop loss at 30 pips, okay? For argument's sake. So what you can do is you can come over to myfxbook.com and just do a search for position size calculator, and you can basically punch in all the numbers and it will give you the lot size that you need to put on that trade. Now, let's just say you've got an account currency of US dollars. Your account size is 1,000 US dollars, just as a for instance, okay? Your risk, let's just say we're going to risk 2% on that trade, okay? Your stop loss is 30 pips, because what will happen is, and I'll show you that in a second, as your stop loss changes, if you had a 10 pip stop loss, you can increase your lot size to basically risk the same amount of money for the same trade. So the smaller the stop loss, the more lot size, or the more you can increase your lot size on that trade for the same risk. So I'll show you that in a second. So let's just use this one. So it's Euro JPY. We'll use that currency pair just because that's the one that we're looking at on this chart. Looking at the Euro JPY on the 60-minute or 1 hour chart. So we've got US dollars, account size is 1,000, risk is 2%, stop loss is 30 pips. Euro JPY, so we calculate that. That gives us a lot size of 0.07. Okay, now if we put a lot size of 0.07 on that trade, that is going to risk 2% of our account. So if 2% of 1,000 is $20. Okay, so what happens is if you can decrease this stop loss, and I'm not suggesting that you decrease your stop loss, I'm just showing you what happens if you should decrease your stop loss for a particular trade. So let's just say we halve this stop loss on this trade. So we called that 15 pips. What happens then is basically you can double your lot size. So our lot size goes from 0.07 to 0.14, which is doubling our lot size. Our risk is still $20. And that basically means the overall still 4.67 to 1. But if you decrease your lot size here down to 15, that's around 15, that's 15.3. It increases that to 9 to 2. So for the same trade, if you can decrease your stop loss and basically put on a higher lot size, it means that you can actually increase your risk to reward. I'll get my words out in a second. So as I say, by putting that at 15, at 30 pips, it's roughly 4.85. If you bring that down to roughly 15 pips, excuse me, it's 9.2, thereabouts. So that just shows you how you can basically manage that. So as I say, you need to look at, firstly, you need to chart up your, or to put your trade, where you want to put your stop loss, where you're going to put your entry, where you're going to put your take profit. I mean, take profit's not so much of an issue, obviously, for your lot size and for your risk management. I've just put it on this chart just to kind of show you. I want to just show you how this trade pans out in a second. So the bigger your lot size, the bigger your stop loss, the smaller your lot size, the smaller your stop loss, the bigger your lot size. Now, what you want to do for every trade, you want to have a set risk. Okay, so you want to risk 1% on every trade, or 2% on every trade, or 3% on every trade. Whatever your trading plan is, stick to your trading plan, stick to your rules, and just be consistent over your trades. Because you know, the problem people have, and the problem I had when I started, you come along a trade, you put your 1% on or your 2% on, and it loses. And then you put the next one, oh, I'm really confident on this one, so maybe you put 3% on the next one, and it loses. And all of a sudden you're 5% down because you put 2% on one and 3% on one. And then the next one, maybe you're not so confident, so you put 0.5% on, and that one wins. So that's great, but you're still 4.5% down. And then maybe you put 0.5% or 1% on the next one and it wins. And again, you're still 3.5% down. But by having a consistent risk, a consistent percentage that you risk on every trade, that's where you're going to get more consistent results. Because if you start playing around with percentages and risk, you know, it's really going to, one, it's going to mess with your head, and two, it's going to mess with your account, and you're not going to get the results that you want. So stick to your plan, stick to your risk that you want to risk on every trade, and stick to that every time. So I'm just going to let this trade kind of play out a little bit, because I want to show you we're not actually in the trade yet. We're coming back up here, and this is where we're looking to get our trade somewhere back in there as an entry. We're just going to play that. As I say, you can see it's come into here. It's come past our entry point, so we've got a little bit of drawdown, and then we just let that play out again. Hopefully it's going to hit our take profit. I don't know if I actually got there yet. So that's hit our take profit. So if that trade was a live trade and we had a 30 pip stop loss, that was like 4.8 or something, whatever it is, to 1. So for every 1%, you'd have got a 4.8% back. So if you risk 2%, then it would be, 9 and whatever it is percent back. So Hopefully this has made sense. Use a calculator. There's several out there. There's MyFXBook, there's babypips.com, there's a couple actually that I've got on my phone that I use. There's one called Stinu, Stinu. That's quite a good one. It's very quick if you're just out and about and you're using it on your phone. But as I say, you can get MyFXBook on your phone. You can get all sorts out there. But just make sure that you calculate your risk. Don't try and guess when you're putting trades on. You're going to run into problems. Mark up your chart. See where your stop loss is. See where your entry is. Take profit isn't going to matter for risk. But make sure, just make sure that you're not risking 30 pips to make 10 pips. Otherwise, if you risk 1% and it loses, you're going to lose 1%. When it wins, you're only going to make 0.33% or whatever it is. Okay, so make sure that you've got, at least a 1-to-1 trade. So you're risking 1% to make 1%. Personally, I like to risk 1% to make 2 or 3% at a minimum, because it helps your account grow. You don't want to be risking 1% to make less than 1%, certainly, because you'll find it very, very hard to grow your account, because you can win 2 trades, you've won 2%, or you win 2 trades, you've won maybe 1% if you're only getting 0.5% back, and then you lose 1 and you're 1% down, you're back to square even, you're back to break even. So you've got to win a lot more than you lose if you do it that way. Whereas if you've got a 1-to-2, 1-to-3 trade, effectively, although you wouldn't want to, but effectively you could only win 1 out of every 3 trades and you'd still be in profit. Or if your risk in this instance is nearly 1-to-5, basically you've only got to win 1 out of 5 trades to break even. Okay, so hopefully this has made sense. Hopefully, the whole risk management has been demystified for you, if you like. Any questions, drop me a comment below, and I will do my best to help you out. But as I say, if you want to jump on any of our live trading sessions, head over to freedomtraderpro.com. I've got a video on there that explains exactly how you can do that and how you can grab 7-day access for free. And I look forward to talking with you in another video real soon. Take care.